a gorgeous day and I wanted to spend some of it making another rate stack video. So I'm going to try to keep this one much shorter than last time. I'm not going to go into as much detail, so if any of this is confusing, please watch that first video. We're just going to reprice the same scenario as last time and see where rates are today. I also realized that last time the image quality was terrible given I had zoomed in the computer with my phone. So today we're going to be real fancy and use screen record. And again, we're just going to reprice that same scenario. Conventional single family residence, primary residence. We had a 760 credit score, FICO score, and we're going to buy $500,000 house, 20% down. So last time we had discussed that I would not necessarily advertise having 5.99 as an interest rate, given it would cost $7,400. And the lowest interest rate at that time, before we hit a cost, was 6.625. It had a $732 credit, and then there was a cost at 6.5. So those are the two rates we were looking at. As mentioned in that last video, these are the numbers that changed. This is what drives the interest rate, and we can see rates got worse. 5.99 now has a cost of over $10,000. And now we're looking between 6.875 and 6.75. We could even consider 6.625 still, but it's creeping up there. You can see this massive jump between 6.625 and 6.5. So if we wanted to do that math from before and see where our break-even point is, if we were to pay this $412 to buy down the rate from 6.875 to 6.75, this column here is the principal and interest. So if we take 2628 minus 2594, that's $34. So you'd save $34 a month with the 6.75 rate option. And then as discussed before, it technically doesn't only cost you this $412, it would also cost you the loss of this credit. So 1588 plus 412 is $2,000. So it technically costs you $2,000 to buy 6.75. So 2,000 divided by the $34 monthly savings is 5 years. That's 5 years basically. You typically would be better off taking this credit. Most people, they're a little interest rate sensitive, so they would rather pay that $412 to get the lower rate. And I would say in the mortgage world, $412 really isn't bad. That's not a lot to buy down a $400,000 mortgage. But again, by doing that based on today's numbers, you didn't really benefit yourself if you were to refinance in the next 2 to 3 years, or 4 years for that matter. So again, I want to keep this short. So I'm going to just kind of cut it there, and we'll just keep doing more scenarios as we move into 2026. Thanks.